The UK Automation Forum is a collaboration amongst a group of industry associations, so MTA, Automate UK, Gambika, and also the MTC. And effectively we came together to look at the barriers that were being faced by the UK manufacturing industry and why we were not as good as other parts of the world at adopting automation technology. One of these barriers that we identified was potentially around access to finance. So we wanted to dig a bit deeper into and understand perhaps what the current landscape was around finance and what the challenges were, and actually whether this really was a barrier to automation adoption. So the survey that we created to kind of understand a bit more about it went out to suppliers, integrators and end users of automation. The questions aimed at determining whether the issues around finance were actually that blocker, and MTA, Automate UK and Gambika surveyed basically their members and the end users within their industry. Looking first of all at sort of a bit of supplier insight, actually the vast majority of automation suppliers don't really offer finance. It's something they kind of leave up to their end users to sort out. They might point their end users in the right direction of a solution provider for finance, but generally it's kind of like you're on your own, guys. Very few of them provide significant information to their financial institutions, for things about 1 in 5. So actually the amount of information that financial institutions have to make their lending decisions on is pretty minimal. Also, there's only a very few of them that offer a bit of a breakdown between hardware and software. Hardware much easier to finance, software much less so. Only a few have lost, it's about 40% have lost projects due to finance issues. Of those that have, about a third of them say that this is due to short payback expectations. So really expecting the finance to be coming back within sometimes even less than 12 months, sometimes even as little as 6. Other parts of the world probably are far more pragmatic in their approaches to what they might see in terms of a payback period. Very, very few, in fact I think only 1 in 10 offer servitization models. So effectively in terms of providing automation equipment that you pay for based on the volume of parts that are processed. And again, in terms of kind of providing ways in which we might make finance a little bit easier to offer, only a third would be prepared to offer a buyback. So, that would de-risk a finance offering from a financial institution significantly if the hardware could be purchased back by the supplier. A bit of end user insight as well, because we felt it was really important to understand directly what the end users were thinking and feeling. Again, less than you would expect would provide significant information to their provider of finance. Clearly, the more information the financial institutions have, the better it is and the easier it is for them to provide an educated offering. Around half have lost a project due to finance use, so potentially not a massive blocker, but maybe it's just because they haven't tried. It's something that we're trying to dig a bit deep into. The vast majority of people who carry out their own automation finance will be self-financed. Those who don't self-finance, only about a quarter of them have had their applications refused, and perhaps because they couldn't demonstrate a financial benefit to the solution that they were looking to go with. So in conclusion, payback expectations in the UK are pretty unrealistically short in many instances. Both suppliers and end users aren't particularly good at providing enough information to finance providers. Most successful automation installations currently are self-financed, either by the supplier providing finance or by the end user having their own cash, if you like. And servitization is not yet a model that has really gained traction within the UK. In terms of kind of explaining where we are and the insights that we gathered, that's kind of where we're at. So,
okay. Did you just want to explain the forum? Why we do it?
Okay, so yeah, as I said, the forum, group of associations coming together to talk about the challenges that are faced by UK industry in terms of adoption of technology and automation, funded and supported by Automate UK, but backed up by MTA, Gambika, MTC, Make UK. We have a website where basically all of our previous roundtable discussions have been recorded, have been stored, and there's all sorts of topics covered there around skills, around culture, and some of the other things that we perceive as being potential blockers to automation adoption.
All right. Well, while your voice is warm, my question one is for you anyway. Where do you see the biggest untapped opportunity in UK automation right now, especially for SMEs?
So I think kind of the question answers itself a little bit in terms of when you look at the UK landscape for automation, you've got large end users who are much better at adoption of automation. They're probably more educated in what's required. They've got more finance resources. They've got better ways of engaging with suppliers of automation equipment, and actually the suppliers of automation equipment are keener to engage with them because they know that's where the money is. Realistically, the biggest opportunity within automation within the UK is potentially with the smaller and medium-sized businesses who would benefit more greatly from the adoption of automation because they maybe have a lack of skilled resources and they currently have a significant lack of automation. So there is a bigger growth opportunity there within the sector. I think finance plays its part in that SMEs are maybe more reluctant or less aware of what finance opportunities are available to them. So I think for us as an industrial sector, focusing on how we can help SMEs break down those barriers to adoption of automation is huge. And hopefully the forum and conversations like this will help achieve that.
Yeah, so Mike, Peter's probably already answered your question that I had lined up, but from your point of view for industry, what is stopping SMEs? I know the easy answer is finance because we're all going to talk about finance, but what else is going on?
Well, I think one of the issues, and this comes from a piece of work we did looking at the skills gaps, if you like, particularly with SMEs, and there are obviously some technical related skills issues, but one of the biggest issues that we identified was actually the ability to buy capital equipment. And the reason we were going through this process was to look at what the gaps were in the skills provision so that the courses could be extended, apprenticeships and such like, to then provide training to SME businesses. And as I said, it was procurement, and it was things like building a business case, writing a specification, how to choose suppliers. And I think one of the key elements within that, as we're talking about finance, is building the business case. And we historically don't teach our SMEs how to do that. It's not on apprentice programs. Now, ironically, when we went through the whole process, one of the things we did do was map the skills that we'd identified against IFATE, which is the organisation that looks after all of this stuff. And they found one apprentice program that actually educated apprentices on buying capital equipment. It was farm management. So that's obviously not a lot of use to manufacturing. There are no manufacturing apprentice programs that are covering things like buying capital equipment. And it kind of resonated with me, given what we found out in terms of the finance being an issue, is if the SMEs don't know how to build a business case, they don't know how to explain to the finance people, the banks if you like, why they want to buy this stuff, then it's going to be very difficult to kind of close that gap. Because if you're, all due respect, if you're talking to the banks, you need to talk to them in a language that they kind of understand. And it's not necessarily about what I want to manufacture, it's about what is the implications to the finance of my business. And I think that is maybe one of the issues in amongst all of this. It's that the SMEs themselves don't necessarily have the knowledge and the experience to actually talk to the finance providers in a way that they understand.
But how do we roll that out? How do we tell thousands and thousands of SMEs how to actually engage with the banks? I know we're doing it here, but there's 50 people in the room.
We need, there's a number of things we need to do. As part of what we were doing, and we are now working on it, is developing elements of the apprentice program so it can can be rolled into existing apprentice programs, developing upskilling courses so we can upskill people to do those particular elements of the procurement process. A lot of it probably comes down to when we're engaging with SMEs, things like Made Smarter, MTC support, we have to help them as part of that engagement undertake all the steps that are required, including developing the business case. It's just got to be slow but sure. And I think we all have a role to play in that. We as MTC and as UK Automation Forum have been having various conversations with the banks to try and help the banks understand why robots are all important. So at least we're trying to close the gap, if you like. But it's going to be a slow process.
Catherine, did you want to?
Yeah, I just think also from an SME owner, making sure the whole company, and I really like your point about apprentices understanding it, because we make sure our whole company understands the business case for automation. Because from our perspective, we want the whole team, the whole staff to come along on the journey with us, because it's important for them, for their jobs, for their skills. But actually explaining the business case makes them really proud of what we're doing, because it enables us to grow the business. So it's kind of a sort of, it's not explicit training, but it's an understanding of what the business case means for the investment.
There's a nice tie in there with some other forums that we do about how to bring your workforce along when you're adopting automation, because it can be scary for a workforce, you know. How many site visits have we done where we've had to cover the logo on our high vis because the management don't want people on shop floors to see a robot come in? So I think you got a good point. It's a good way of bringing them along that journey and understanding that they're not losing their job. They might be being upskilled. This is going to help the business grow. Just before I go on to the next question, I forgot to say, there's a QR code either side. If you want to ask questions, I've got an iPad here that will flash up with your questions. Laura, it's going to lead nicely into finance, obviously. So what's available right now?
So I think finance is a tried and tested method to being able to support businesses unlock that investment and ultimately to achieve those long-term ambitions and goals that businesses have. And as a bit of a precursor to the work that we've done with Automate UK, we also produced a report with Make UK last year that looked at some of those investment intentions of manufacturers and their funding requirements linked to it. And interestingly, what we found from that research was 70% of manufacturers said that without access to finance, either all or some of their projects and their investments just would not have happened. And a further 87% said that they'd need access to finance to deliver the investments that they needed to make for the next 2 years. So that's positive that there's that awareness from that perspective. And actually, when we drill down into robotics and automation, there's about 40% that were already using finance to support investments in robotics and automation. And that worked out about 4% of their 12-month turnover on average. But encouragingly, sort of 1 in 3 manufacturers were therefore then looking to see what they could do in terms of finance for their ongoing projects. So, manufacturing more broadly, it's a bit more aware, there's more awareness, but coming down to robotics and automation, there's more work to be done. And I think that just comes back to that awareness point. What's really key is understanding and speaking with your banks and funders to understand what those funding mechanisms can look like. And traditionally, the most obvious one is asset finance. So asset finance is where you can spread the cost of the investment, the asset purchase, over a period of time, usually to match the useful lifespan of that asset. And I always liken this to buying a house, right? So you don't wait your whole life to buy the house and save all of that money that's required. You save for a deposit and you use the income that you earn from your job to repay the debt of that loan, which is secured against the property. And to be fair, asset finance for a business and the investments in whether that's robotics and automation or other assets is exactly that same concept. How do you make those investments that deliver the benefits for your business for the long term? So that's really key. And I think going back to the point around talking to your funders and any stakeholders, whether that's the MTC or the like, it's about understanding how can we make sure that structure works for your business. And just to bring to life a couple of examples, so not only does it help you actually buy the asset in the first place, but there's also the dynamics of thinking about, okay, I may be dealing with a supplier that I've not dealt with before. That supplier might be abroad as well. How do I make sure that I mitigate any risk from that initial investment point of view? And we recently supported a food manufacturing business where they were actually implementing quite a lot of automation in their production line, quite a significant investment. They were dealing with multiple suppliers, and some of those were suppliers abroad. And the payment terms, as you'd expect with some of these things, was initial upfront payment to a supplier that you don't really know. It's got to be in the water for a long time. And that would have impacted their cash flow and their working capital quite significantly whilst they waited for those goods to turn up. And there's that risk of not dealing with someone that you've dealt with before. So as a bank, we were able to support with letters of credit. You can also look at sort of guarantees on that basis. So we mitigated that risk, but we also prevented that business from having a dent in their cash flow, which they needed just to continue to trade and operate. So that, that's just an example of not only is it supporting you when you're making that investment, but actually some of the initial risks and thoughts around that. And then similar sort of solution that we support with, you can be dealing with a supplier in the UK, and again, often payment terms, as you're probably all familiar with, is staged. Again, how do you make sure that that's not denting your working capital and cash flow? So we can often put in place things like we call it a pre-inception facility. So as a bank, as a funder, we can pay those stage payments for you, and then we crystallise that into a hire purchase or lease at the end. So some of those things you might not necessarily expect a bank to be able to support with. And my key message with all of this is have a conversation as soon as you're thinking about embarking on a project. What I would say is, and Mike's absolutely right, it needs to start within the business, but also we have relationship managers up and down the country that support manufacturing businesses and adjacent industries. And we take a real vested interest in understanding what your business needs, what the dynamics are, and we might be looking after similar businesses with similar challenges up the road. So what we might be able to do is add some value to those conversations, connect you with the right people, so speak to us early on so we can help work with the suppliers, work with the likes of whether that's the MTC, and more importantly work with you to structure that funding in the most effective way for you and your business.
Catherine, from your point of view, you've obviously invested in automation, you've used financing. Can you just talk us through that story from BAM UK?
Yes, so we finance pretty much. So BAM UK owns one of the businesses we own that has the most investment in automation is Contracts Engineering, and we're a sheet metal fabrication facility in the southeast of England. And we've grown from in 2012 when we bought the business that was very traditional sheet metal fabrication, but through investment in fibre optic lasers, punch, press brakes to robotic welding, we've grown 6 times, and we're now servicing OEMs and tier ones. And that has the last 3 to 4 years since we've invested in automation has where we've doubled in size, and we've been able to completely work with a different type of customer. So we have financed every piece of equipment that we've bought. I think there have been a couple that have been under 100,000 that we've bought outright. So knowing your bank really well and having relationships with a couple of financing institutions, whether it's NatWest, Lombard, and we've worked with a couple of others. So always talking about what we're doing, how we're doing, being able to present the business case. So I think it's sort of originally it was very much here's the asset, here's what it's worth. But as we've gone more and more into automation, it's less here's the asset, although there is here's the asset. It's what's it going to do for the business? How is it going to transform the business? What type of work will we be able to do? How much we'll be able to scale, because for us, automation is really the scalability and the consistency of our scalability that's really important. So our journey has been relationships with our finance. It's always been through financing institutions, not through the supplier. And speed, us knowing how financing works and having good relationships with our financiers means that we can work quite quickly, and that's been really, really important with a couple of our purchases. We've bought a couple second hand, and that has to go through quite quickly. And yes, getting used to explaining the business case, I think, is really important, so that we're thinking 2-3 years ahead of what will we need to grow to the next stage. What does that business case look like, so that we can then translate that into financing requirements. And then always looking at our cash flow and P&L and balance sheet all together, and making sure that we're able to sustain all of that. And every investment, it's basically an investment. The investment has to provide a return, and monitoring that.
Okay. So if there's an SME in the audience that's in a similar position to Catherine, Laura, what are you asking them to bring to you? What information do you need to confirm finance?
Yeah, so I guess just expanding on some of the things Catherine talks about there. So I think, the first thing is understanding what your funder needs from you. And the main thing that we look for is affordability. So, and that's of equal importance to not just us as a lender, but you as a borrower as well. So to Catherine's point, is your business going to be able to sustain that investment for the long term, so that you've got that financial stability and that you're not overstretching yourself? So when we look at affordability, most of the time we look at your historic performance as a good barometer of what have you done and how can you maintain that going forward. So that's where it's really important to be open and honest with your bank. I know there's that sort of worry of, we don't want to talk about where we may have had some volatility, but actually understanding, we know that businesses have faced multiple challenges, whether that's been increased energy costs, supply chain challenges, interest rates going up, understanding what your business has done and been through, so that we get a really good understanding of your track record. But then more importantly, to Catherine's point, actually what is that investment that you're looking to do? What's that going to generate and what's that going to do? So why are you making that investment in the first place? Is it because you're looking to decrease your costs, and actually by investing in that robot or automation will actually generate efficiencies, boost productivity, and therefore reduce cost to your business? Is it because actually you've just won a new contract and you need to invest in new equipment, but actually that will increase your income and revenue and therefore your bottom line? So it's understanding the importance of why you're making that investment, and then sort of coming back to the points that were made earlier, working with that supplier of that equipment, because they're going to know what that can enable your business to do. They're trying to sell you it in the first place as well. And sharing that information with your bank and your funder, because actually that's where we can look at that forward look view. What's that going to enable you to do in terms of your income and your bottom line? So affordability and purpose is really important. And then, as Catherine said, the asset is important, but it's not the only thing that we look at. So understanding what the application of the technology is, what that's made up of. So we have our own internal team at Lombard, which is part of NatWest, our asset finance division, which they're asset managers. So they're not bankers. They look at assets day in, day out. They work with valuers, they work with suppliers, they understand the market, so that we can understand what is that asset worth in a gone scenario. And it does get tricky with robotics, particularly where it's bespoke. But that's where all the other elements come into play, and it's actually what's the longevity of your business, the affordability, because we don't need to be asset secure on every scenario. And I think the key thing, and Mike and I often talk about this is actually the technology with robots it's become much more standardized. So that the technology that we're familiar is, there is a second-hand market, there is a residual value. So that's that finance companies can support you on those investments. Don't be afraid to have a conversation around that. So I think that those are all really key things. And in terms of getting as much information as you can at an early stage is really important to share with your funders so that we can structure that, as I said, in the most efficient and effective way for you.
Okay. Mike and Peter, I'm going to bring you back in here because there's a question around ROI, right? And Laura's mentioned things like energy reduction and the cost of energy and all this sort of stuff. Should we be assessing ROI a little bit differently? You know, is there other things at play here like sustainability or energy reduction or a better workforce that brings together a better business case than I'm going to put a robot there and it costs 100 grand and I need 100 grand off the bank? You know, an SME needs to build a case because, like Laura said, not all the banks don't know automation like we do. We live and breathe it. So how can they bring their industry experience, things like ROI, to build a proper business case to the bank? Whoever wants to go first.
Do you want to go first or do you want me to do?
I'll start, but because I've got a particular example that's worth sharing. But I'll start going back a couple of steps. So the International Federation of Robotics produced a document that was called the 10 Reasons for Using Robots. And that was, I think, 1995 when they did that. So it was before sustainability and all those kind of topics. But there's a whole raft of issues, things like warranty costs, things like recruitment costs, PPE, all those kind of side issues that people don't think about that can help build that business case. Because if you can reduce your labour turnover because you've automated that awful job, you're going to spend less on recruitment. If you can improve your quality, you're going to reduce your warranty costs. All of those things can be quantified. And people often do it purely on the fact that I had a man or a woman, doing that job yesterday, and I've now got a robot, and the man cost me, or the woman cost me X, the robot cost me Y. What does that work out to be? It's much more, you can be much more intelligent than that. Sustainability is now an issue that could go on the list. But the particular example I want to give you is a business up in Barnsley that was making bread rolls for pret-a-manger. And these bread rolls were baked in what's called a real oven. So basically you've got a tray with bread rolls all over it. You load the tray in the oven and the oven takes it around through a cycle and brings it back to the start point. You take it back out. But there are multiple levels on this oven, so you actually keep loading bread in and you keep taking it out. Doing that by hand, the guys couldn't keep up with the oven. So they were operating at half full. When they put a robot on to do the same thing, the robot could take a tray out and put a new tray in at the same point, and you could operate the oven full. The labour cost, the labour saving was trivial in comparison with the energy saving, because you're baking twice as much bread for exactly the same cost in energy. And they hadn't even thought of that when they first did it, but that was the real benefit. And that's often the case, is to figure out, why are you really doing this and what is the financial benefit going to be from that? And if you've got that case, then the banks will buy it. They'll understand it. And it's about thinking through those different options. It isn't just about what's the labour cost versus the cost of the automation. It's about all those other savings and quantifying them against real pound notes. And it's not easy to do, but it is doable. And maybe the first time you do it, you need a bit of help. But once you've done it once, you've got that kind of mechanism. You know what you have to do to go through it. And if you can do that, two things. One is you might get a lot more projects approved. But the second one, I think this is very important, is you might be able to justify a bit more money. And the automation projects that fail are often the ones where they've been bought too cheap, because they haven't been able to justify enough money to do what they really need to do. And if you buy too cheap, you run the risk it's not going to work. If you can justify more money, maybe you could get a better solution and something that really is going to work. So it's worth investing the time to go through all those alternatives in terms of where am I going to save money as a consequence of automating this particular task.
And there's value in, that's where you bring in the supply chain, MTC, the integrators on the shop floor, the vendors, the robot guys, that it's just an extra set of eyes that, when you're just operating that oven all the time, you don't think about the energy consumption.
No, exactly.
I think the other standpoint that maybe we don't always look at it from is, like you say, you're always looking for a payback, but actually a lot of the time the reason for adopting robotics and automation is to scale. It's not to replace or something. So actually looking at the benefits that you're going to gain from the adoption of automation, looking at the fact that you don't have to go out and recruit, which, as we all know, is a significant issue at the moment in terms of recruiting skilled labour. So to kind of try and understand how it makes your business more scalable, actually then makes the ability to go out and get that asset finance or any form of finance far greater. Understanding the challenges and obstacles that you'll help a business overcome to make that business in its own right more sustainable in the long term is another compelling argument that you can present to a bank in order to be able to unlock that access to finance. And I do genuinely think it's underplayed at the moment. In order to scale and grow a business, there isn't this pot of labour just sitting there waiting to help you grow and develop it. You need to go and look at how technology can support and grow your business. And just as to say, the low cost labour solution doesn't exist anymore. So the business without automation is less sustainable than the business that can't find staff.
Catherine, what was the biggest benefit in automating for you guys?
I completely agree with that. And we've never seen it as replacing staff. It's enhancing or augmenting. And so our team, skilled welders, really tough to find. And if they're doing the same job again and again, they're highly skilled. So doing the same job again and again and again is actually boring. So if we can when we found robots that can do that, our skilled staff are more challenged, more engaged. They've been trained in how to use robots, so they've grown, they've been trained. But from a sustainability perspective, in terms of the business, yes, for us to grow and to scale, we hit a plateau because of just not being able to find enough people to want to do the level of consistency or quality or the efficiency that we needed to do to service the clients that we wanted to work with. And so we've now got a team who are really proud of working for their clients and really proud that they know how to operate robots. And I'd say from a sustainability, from an environmental perspective, 100% energy reduction, not 100% energy reduction, but I agree, less waste in terms of we're able to be more efficient in when we're welding or nesting parts. We can, everything, in terms of efficiency, we can produce more quickly. And our energy consumption has gone down. In consistency and quality, it means we have much fewer rejections or parts that have to be redone. So from an environmental sustainability perspective, it's really, really important, yeah.
Okay, I've got some questions from the audience. Thank you very much. Keep them coming. Supplier resilience is a key topic in today's climate. Is financial a key blocker or enabler to sourcing UK sovereignty and automation? Who wants to take that one? Supplier resilience.
I don't know who asked that question, but I think the if we mean supplier resilience as in the SMEs that are potential users of automation, then finance needs to be made available, and it is available. My understanding when I talk to the banks, and it's not just NatWest, it's the others as well, there is money available. It's about how do you access it in the best way so that we can use the automation. I know the automation providers are willing to do it. They have the technology, they have the skills, they're there and are able to deliver the solutions that are needed. I think the challenge really is we need the SMEs to be asking to get these kind of solutions. So I'm not sure that's an answer to that question, but I think that's kind of where it's going.
Yeah.
Is we need UK manufacturing to be resilient, and to be resilient, it's got to use more automation because it can't rely on doing it the way it always used to do it.
Yeah, Laura, there's a point there that Mike's just made about there's money available. Is that true? What trends are you seeing? Are you seeing people come to you ask for money, or is it they just don't know it exists?
Yeah, I mean, look, the last few years have been obviously challenging for many businesses. So I think it would be, can't ignore the fact that businesses are, just been faced with national insurance, minimum wage increases. Obviously, as I mentioned, some of the costs where energy went up, materials have gone up. So I think what we've seen across the manufacturing book is that there has been a slight gradual decline in the lending that we're doing. So that I always think that's a barometer of just the investment intentions, I guess, there. But it's not unsurprising, I guess. Well, interestingly, though, what we have seen, so particularly in our asset finance funding solutions, we often put credit lines in place for those of you that have borrowed under those sorts of facilities. That's where we would tell us your plans for the year ahead, and we'd look to put that limit in place to accommodate that, so you don't have to constantly coming back and telling us about specific projects. So for speed, it often helps with that. And our credit limits have increased quite significantly. So the intentions are there. And I think then when you wrap around just what's going on in the globe with, Trump flip-flopping on his tariffs and things like that, just general investment intentions are obviously a little bit more sustained in that respect. And you look at the PMI and that echoes and chimes with that. When I compare that to other sectors are pretty flatline. So it's not like we're seeing huge amounts of growth across the board. Obviously, there's pockets in different industries. So, but to answer your question, the money's available. It's just a case of, I think, coming back to some of the points that we've made. It's how do we build that confidence, that understanding that, yes, things, it is an investment, and sometimes that can be as small or as large as it needs to be. But it's understanding, as I said, working with key stakeholders, with your funders, to go, actually, what does that investment and unlock for the long term? So how do I make sure what I'm doing now sets me up for success in the future? And actually, as a funder, we care a lot about your viability for the future. So it's really important that we see you making those decisions, how you can bring technology into your business, how you can make sure you're more sustainable. Those are the sorts of attributes that we're looking for successful businesses. So we encourage those sorts of conversations and want to work with you on projects like that. It's just sort of, I guess to your point, Mike, how do we help people get over that line and make that initial investment?
Mm-hmm. I've got a really interesting one here from the audience. It's like robot as a service. So I'm going to pick on you, Peter. Here's the full question. Is there a standard mechanism from financial institutions for robotics companies to provide robots as a service to their clients and finance the upfront capital to the company and not their client?
Yeah. I guess that's
You're welcome, by the way.
Thank you. I guess that's kind of pushing us back towards a bit of what's the servitization kind of model look like. It's not that readily available, I would say, in the UK when it comes purely to robotics. You'll see it in other types of automation. If you look at things like part of the other side of our association membership is within special purpose machinery for food and pharmaceutical, and you'll have much more of a kind of financial mechanism around that, which is about the supplier takes a bit of the risk, and you basically pay for your machine based on the amount of product that it produces over a period of time. And that does kind of take the risk slightly away from the end user and bring it back more to a combination of the supplier of automation equipment and the financial institution. I guess at this stage with robotics, because they are not necessarily, if you buy a standard robot, it's actually how you program it, how you install it, how you tool it, that is the important bit about how you deliver a solution. And that's going to kind of be unique every time. And understanding how you can offer that as a service and how financial institutions can support that is probably a bit of a challenge. And at the moment, I don't think it's one that we've solved in the UK. I don't know if you'd agree with that.
I mean, we are. There is an appetite to try and look at different funding models, because we do need to appreciate that we've got to move with how people want to utilise their assets and the funding solutions to match that. But to your point, Peter, it's quite difficult to look at how that application works when you've got a supplier, an end user, and the funding company. But an example that we're just currently looking at, where it's almost like warehousing as a service, so not quite manufacturing, but the principle of, large supermarkets where they, all the cages that they're moving around, a robotics company coming in, providing all of that technology and that investment, the ability to do what the supermarket needs it to do, and that third-party logistics provider as part of that arrangement. Supermarkets are spending significant amounts of money, and whilst the third-party logistics operator is the one that's deploying the equipment, the supermarkets want that reliability, I guess, of actually, we can't have anything go wrong here, and if that third-party logistics company suddenly goes pop or what have you. So there's a sort of an arrangement we're looking at where the supermarkets then will do some kind of like guarantee buyback kind of thing, because then their idea is, well, this application can be used by another third-party logistics provider. So it's quite bespoke and unique, but it's starting to go down those lines of, what's the problem statement? What are we trying to solve for? Who needs that solution? So obviously the supermarket does. The third-party logistics provider doesn't want to provide all that investment themselves. So it's looking at different models to adopt. And then once you build those principles, you can think about how you can bring that into other industries, other applications. So it's starting to get there, but I mean, I know we're massively behind some of Europe that use servitization models more frequently than we do. So it's how can we learn from that as well?
Are we aware of any other financial support outside of the bank? Is there any grants that are available? Anything tax-wise that's in their favour to automate?
You've got capital allowances, potentially. You have to be making money to benefit from that. You can potentially, although I think it's now getting harder, you can use your R&D tax credits to offset some of the costs.
You're doing some sort of some sort of scientific or technological kind of experimentation or discovery in that application, yeah.
Yeah. Depending on where you are in the country, you can get some support for things like training or related topics, but that is very much dependent on where you are. And then there's the Made Smarter program that will potentially give you 20 grand towards the cost of buying an automation solution. But currently there isn't a significant major program that's aimed at increasing adoption. No.
Okay. Not the answer that someone in the audience was looking for.
Actually, it reminded me, the very first piece of equipment we bought, I think in 2013 or 14, was a 0% loan from Kent County Council. But that was the last it was ever offered. But that was that. I remember going for that and getting it, and it was brilliant. And then the following year, it had ceased.
Okay, last one for the audience. How would the panel suggest system integrators access finance to create and innovate new technologies? Want that one, Peter?
How would
the panel suggest system integrators access finance to create and innovate new technologies? Obviously, we've spoken about SME end users quite a lot.
So yeah, I mean, it is a challenge, obviously, because the banks would be lending, or finance institutions would be lending against a installed solution whereas I guess if you're looking at how do you get access for finance to do research and development to do an installation, I mean, I guess a lot of that sits around the finances or the grants and things that are available around Innovate, that are around some of the other government institutions. I think we advocate that the government could do more to support that and make more available to people that are developing new technologies. And that would be my preferred solution, in that systems integrators would be able to access a pool of funding for that specific R&D development around automation solutions.
I guess just to add, again, on the topic of evolving how funders can support, one of the things that we've launched last year was intellectual property funding. So if there is that innovation, and that development of a certain application, then if that's patented, that obviously has a value. So actually, how can we adopt our thinking in there's value in that? All right, it's not a tangible asset, but it's there's value in that anyway. So we are able to look at unlocking again some funding against that value. So we work with a company called Ingot that would work out what that value would be. So you're not having to dilute your equity or anything like that. So we often we use that as a way of how do you scale up to the next point so you can further that innovation, keep going further with it. And an example, we work with a manufacturing business down in Bristol where they do prosthetic arms. And it's quite cool. They do them all on like Marvel. So for kids, they're quite trendy arms. I'm doing a really bad job of selling them, I know. But they had IP, a lot of IP around their design. So we were able to unlock the investment that they needed to then look at further investment into designs and how they could go further and faster. They didn't necessarily have the tangible assets. So I think for to answer that question, there again, go and talk to your network, your funders, your banks, because there are innovative solutions that we're looking at all the time in terms of how can we support you in different ways.
Okay, you're not aware, but the time ran out in front of us all. So, but we did start a little bit late, so we've got a couple of minutes yet. So I've got a closer. So for each of you on the panel, what's the one thing we need to do differently to influence the future of automation adoption in the UK? Start with Peter.
Start with me. To go slightly away from the finance topic, I think for me it's very much around skills. It's about creating the right skills within the UK to ensure that we have the ability to adopt the technology. And a large part of that rests with how do we educate, like Mike said earlier, how do we educate senior management in businesses to be better at engaging with suppliers of automation in terms of how does that technology actually benefit their business.
Yeah, I would kind of take that and add a little bit more. It's thinking about the outcome of what technology can do. So it's, yes, business owners even understanding the applications of technology and what we're doing today and how we can improve using technology. So it's educating ourselves, but also educating a wider workforce, but then really thinking about what can automation do for our business? It's not really it's not doing the same thing. It's actually how can it improve the business? And always thinking of automation as an improver, an improver, not just an enabler, is how I think we should think differently. I'm
agreeing, but I think the other thing, and we've had one politician and one former politician speak today. I think one of the challenges we have in the UK is that manufacturing has never been seen as being that important for quite a number of years. And I think we need kind of the political will, the leadership to say manufacturing does matter, productivity does matter, and we will find ways to help. I'm not necessarily saying it's going to be pots of cash, because it probably won't be, because there isn't any. But I think at least if we have a direction of travel coming from the top, and it then just provides more positive encouragement, hopefully a stable environment that then allows people to invest. So if you like, I think these are all complementary, by the way, but I think I'd pitch for the Prime Minister standing up and saying manufacturing matters and we should be a lot more productive and we should be using a lot more robots and automation to achieve it.
Yeah, and I guess just to build on all of those points, I think it's about trying to think what your problem statement might be. So what is it that you're trying to do as a business, whether that's to grow, scale, digitalise, become more sustainable. And I'm not saying automation, robotics is always the answer to those things, but then thinking about actually how can I adopt that technology. And when I talk about technology, that might also include AI and things like that, because that is what's really going to revolutionise this sector and many other industries. So I think it's thinking of what that problem statement is and then working back from actually how can technology support me overcoming that. And I guess just to sort of, round up what we were talking about then, it's then collaborating with your network, with who you know, asking those questions, what have been done elsewhere, speaking to your funders as to what they've seen, how they can how they can support, because that's key. In the absence of having the policy, we've kind of got to do it together and drive success forward in that way.
Okay, well, thank you all. I've got a couple of points just to close. First, thank you all for sitting in here at the end of the day. The UK Automation Forum, we hold these talks regularly on different topics, so you can find past and future videos on YouTube, LinkedIn. We have a website, UK Automation Forum. Secondly is use the networking after this to speak to the panellists. Beg Laura for money if you need to, but it's an important topic, so thank you all. Steve?